Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?
Alright, so hi guys, welcome back to the Greedy Trader channel. So once again, this is where we show you everything about market profile. Now if you haven't seen some of my videos, then go back, watch the previous videos I've done so you can see how we do things here. Now, talking to you guys. Now if you've been watching my channel for a while, then it's just another video, right? You know the deal, right? So you'd see something today very new on my screen, which for guys who've followed me over years have never seen me do this, is put an indicator on my screen. But this is a different kind, right? And I wanted to talk specifically about that. And that's because we're going to talk a lot today about squeezes. There's just not enough people who understand that the whole idea around trading is the simple facts that people consistently mess up, right? And when people mess up, that's where money gets made. And in order for someone to be in order for someone to mess up, someone has to be too long in the market and someone has to be too short in the market, right? And that's where the errors come. And that's what we talk about when we talk about squeezes. So today we are going to put some meat on the bones, and that is the reason why I wanted to have this up on my screen. So as always, we are going to start with the weekly profiles, right? As always, we try and break the market down so everyone kind of knows what's going on. So let's briefly hop onto that. There we go, perfect. So we got the Aussie dollar up on the screen. Now as we're discussing last week, we had the build up in bids, right? And then we noticed here that there was a gap in value. So there's every chance the market is going to trade here, but we also have a gap in value to the upside. Now, naturally, I'm more from a structural point of view, I'm bullish on the Aussie dollar. And even though we've gone down for a few weeks, I am structurally bullish, which means that this was a buy the dip scenario. So it was prudent for me to be long the Aussie dollar with good risk management control. Now, if we look at this chart very closely, we can see that we have bids under here, we had bids here, and now we have a build-up of offers, and we are trading out of those offers back in the bids. So technically speaking, we're in a bit of a trap zone. Now, if we do break under bids and we trade out the print, W period, then we're going to fill the gap, and then we might take some buying from bids down here, which is probably where we'd get the reaction from and then trade the gap. So there is a chance that I could be wrong on the idea that we're going to bounce off. We did bounce off bids briefly. Let's not forget that we closed very high on the week, so this could have been a really good intraday trade if you guys took the concept that they're bids below, we're not just going to chew through them, right? So quite clearly traders were too short here, and then we had to close higher in order for those shorts to cover, right? So they got squeezed, and that's the whole idea, right? So this is kind of where we are now with the Aussie dollar. So talking about squeezes, right? The MFI or money flow index is a derivative of the volume traded, right? And that's why we're interested in it. Again, if you look at my previous videos, we talk a lot about volume. If you look at my programs, and by the way, I have a free Discord server, link below, where you can come in and see what it is we do, have a chat with me if you like, and so on. So it is a good space for traders to get involved. So I have a Discord server where I have everything that you would like to know or understand. So check it out, and it's a good way to engage. Yeah, but back to the MFI. So for the money flow index, it's important because it deals with volume. And what we can always see, and remember, this is not a straight out overbought, oversold indicator, right? I'm looking at this on a weekly chart. Obviously, that's why I had to change from what have been my normal rotation time frame to a weekly sort of time frame, so I can kind of correlate it with the MFI. Right, so the money flow index tells me when participants are squeezed, and what we would notice is that it's very consistent through the years, right? So this if we were to look at this all the way back to 2014, in fact, we would see that traders were too long when the MFI was above 80, right? So they were in a squeeze position, and they were usually two multi-year extreme shorts when the MFI was trading roughly about 20, right? And we can clearly see that. So let's put some context to this, right? So let's take, for example, and this is how, you know, I've spoken about the commitment of traders report before, and again, if you trade futures and stuff like that, this is how you know where the turning points are coming, right? So let's go back a little bit. Yeah, let's go further back. Let's go to the 18th, let's say 2nd of October week. So if we take a look at that for a second, 2nd of October week, let's try and find that profile again, because the profile doesn't directly correlate with the indicators at all, and we actually have to find it. So we're looking for, so if we go historically, date wise, 2022, right? So 2nd of October 2022, so we should be outside of this frame here, right? So let's push back. This is December, so we're not far now. It's October, November, and October, 30th of October week. Let's go further back, 23rd of October week, even further back, 16th, and 9th of October week. So that's close enough, right? So it's bottom of the market, 9th of October week. So you can see what we did here on the profile. Traders were too short. We see the build up here, and this is likely shorts covering a close lower, which was a deceptive close, because we can tell here that bids were trading here. This market was incredibly short. The fact that we will build up new offers here to sell lower was extremely slim. So the close here, what we need to see is a reaction. We can look at an engulfing of value, a close above bids, whatever it is. We start to get a good signal here, because we can see bids building, and we know that this is going to be a primary buy zone for limit orders. So that's kind of where we want to sit. Right, so if you want to put a buy limit, that's where you want it to go. We can see there was an inefficiency, a gap in value, so we already know that's going to get filled. And even if we get some volatility, we should reasonably conclude that we've established some degree of support. So your objective at this point would be to get long, but before you do that, you just want to be able to check. So if we go back to what we were talking about on the MFI, we can see that the traders were extremely short, and they were at a multi-year short. So 2016, 2017, 2018, 2019, we've never been this short, right? So now we're seeing bids building, market closing. We know we want to be long, right? Because again, if you're short at these levels, then you're just stupid. Sorry, guys. It's just dumb. There's just no way you're going to say, well, I'm going to be right. You might be right for like a week or a couple of days, but ultimately that market's going to rip your face off, right? And that's kind of what we want to kind of illustrate. So again, that was kind of the idea. So for where we are now, we can see the market's a little bit in the middle of nowhere. We can see, however, the MFI has really gone down really fast over just the past week or so, and you can see that here, and you can see generally we start to find some kind of squeeze up at these levels here. So again, the market is not showing much appetite to go long at this point, but judging by how fast we've come down on the MFI, I would say that the downside move on price has been overemphasized, right? And again, this is the whole point, right, of understanding that, well, if we can get down to where we were on the 5th of March, this becomes a good squeeze level, because we know there was a squeeze there before. So again, a good way to do this is 5th of March. We just find 5th of March on the profile. We got to check if this is 2022. And I'm giving you all this stuff for free, guys. It's unbelievable. I'm beside myself. Anyway, so 5th of March 2023. Let's just go back. Where are we? 28th of May. Where are we? 5th of March. 23rd of April. 5th of March should be around about here. Fantastic. Even better. Look at that picture. Fucking perfect. Unbelievable. So again, you can see bids building here, right? Bids building here. We closed lower, deceptive close. We opened above bids, right? Well, that's telling you the market's priming. So here we can see there was a bit of a squeeze, and we did go up for a few weeks. We went up, traded almost to offers before collapsing again. Even when we drops down here back into bids, you can see that here that there was a divergence, right? So despite having to trade back in a bid, so we can always check the dates of that. That's 23rd of April. Let's see where this is. Exactly, picture perfect, 23rd of April. Right, so we're diverged, so we weren't exactly in squeeze territory, and then we went up again. Right, and look how quickly the market dumped. Right, and that's because if you look at the upward swing, it was way too aggressive. We were trading really close to squeeze territory, and look where the market was trading, back in at offers. So this sell-off, right, and this build-up here tells you that the market was a little bit too long, so they're uncomfortable with this sort of level, and that's why we had that big swing to the downside. Now we can clearly see from where we're trading that we're too aggressively low, right? Price really ripped, and we're kind of standing here. So if we get more downside, it tells us that reasonably this should be an interesting squeeze level. Now we don't necessarily want to just trade off that. We want to be able to see how the profile reacts when we get down here, and that gives us some projection, guys, where bids are. So then we know, well, their bids here, their bids here. If the market's struggling, then true range and everything, we should start to see a buildup of bids again, right? And that should reflect by where the MFI is. So if we're diverging, it's even worse. If the MFI is heading upwards and we're seeing prices going lower and accumulating at bids, then it means that there will be an aggressive chase of price, and we're going to see the money flow take us maybe back into the, which is the extreme for this year. Well, yeah, for this year anyway, or close enough to the extreme. So again, there's a high propensity that we're going to trade back into squeeze levels if we push upwards. And when we get there, guys, that's where the sell interest is. And if we look at where we're potentially head, if that happens between value high and offers to the upside. Right, so guys, the point here is this is how professional traders get to squeeze people, right? Because if you're not looking at this stuff and you're not following what's going on, then you have a problem. So again, with the way you see people use indicators these days, is just, it doesn't make any sense, and that's why they don't work. They don't work because people don't know why they were built and how to use them. With the money flow index, because I know it's a derivative of volume, I don't need to treat it as a leading or lagging indicator. I just need to treat it as what it is, which is a visual expression of traders being too short and too long, and it's based on the extremity of volume, right? So anyway, moving on. So I just wanted to give you guys that picture there so you can see what it is you're up against, and this is why we respect the use of market profile. As professionals, you know you don't want anything else. All right, let's talk about crude oil. Crude oil, we've seen a nice little build up of bids. What's been really interesting about crude is that these competitive buyers, they've really held out. At one point, I was like, we're going to strafe, we're going to find the liquidity below, but we're seeing bids building. There's definitely aggressive move coming up for crude. Now that said, of course, we're aware of where the offers are stacked. We haven't really tested the sellers up here yet. So again, I would expect us to see some kind of reaction here, unless we're going to chew through that, in which case we're looking at offers to the upside. But for me, it's a bit too late to chase into trades like this. Personally, I would say you want to kind of wait. Either you get some more downside, so you get some interesting bid plays where you can get long, or you just wait for the sell. Doesn't make much sense not to. So again, the S&P 500, you can clearly see that we are structurally bullish on this one, have been for a while. We got some inefficiency down here, so expect that at some point we're going to get a bit of a fall off a cliff. We have seen a buildup of sellers here for sure. We're trading back into value, so again, unless we can comfortably break the sellers up here, again, we could see some selling out to the downside, and that's the risk that we have. We got a nice little bid stack here, so that's where I'll look for support. but more than likely the gap in value needs to get filled. So again, we're structurally bullish long term, so if any dips, it's just a buy the dip scenario. Gold on the weekly, we've spoken about this. We're now trading off bids, we're sort of stacking. It's a real struggle right now. If we can close above sort of PC period, then I would expect us to at least come back and test offers. Remember, we are long-term structurally bullish on gold, but we do have to see this thing cool off. We've been too short for too long, and once again, if you're looking at the extremities, you know, we're getting low, and we're getting low fast on the MFI, so we're getting into squeeze territory. But again, we're not seeing too much movement now in price, so we're literally dipping in, but price is kind of hanging about. So really and truly, pay attention to those squeeze levels. With gold, we tend to overextend the squeeze points a little bit, but largely, you know, we can take this as a cue that we are seeing some short-term lows anyway. Again, we have a massive gap in value here, so at some point I do expect us to clip that 1850 at least, so watch out for that one. Cable, we are structurally bullish on this one. We still think there's one more leg to the upside. Again, if you can see, we're definitely now at squeeze territory. We can see this level is the consistent squeeze level. We're below it now, so that gives us a little bit of interest to the upside. We can see the MFI is flattened out, so again, we're not seeing any more interest in the downside yet. But you must understand, this is the multi-year highs that take us all the way back to pre-2008 financial crisis, right? So again, if you look at where we are, I mean, again, I can tell you because I know the data going back that this is a prime squeeze level. We have never broken this squeeze level, like ever, right? Going back to 08. So again, any upside pushes will expect us to be in squeeze territory, which tells us that the pound doesn't have much more legs than 130, for example. So yes, we could get a big squeeze to the upside, but it would lead to a mass sell-off. So there is literally no hope of breaking beyond the sort of 130, 133 level maximum. Dollar yen, again, we call this, look at this, right? Again, expecting the downside. We had a nice little build up and we broke. We're still breaking, we're trading into bids. We're probably going to break that, trade the gap, and I think we might start to cool off. And again, what is showing us, what are we seeing here? We are in squeeze territory. In fact, we're heading now even into deeper squeeze territory as the price is going much lower. So it tells us that we're going to even have a bigger squeeze to the downside, and then we look at trying to buy bids. So again, we need to see this MFI come lower for the buy interest to return, right? So at least we need to dip, in which case we are diverging, right? And that will be interesting, but we definitely need to go a little bit lower. As you can see that this is the sort of multi-year squeeze territory. Dollar CAD, similar situation. We're building bids here. Again, massive gap in value. I do expect us to go much higher and close the gap. So we are somewhat weirdly seeing some dollar strength on one side, dollar weakness on the other side. So quite interesting. Again, Bitcoin, we're trading here now. We're sort of building. Really weird one because we are pushing extremely low, extremely fast. So I think we're going to get squeezed on the short sellers because we're not seeing much movement in price. However, we do have a big build up here. So personally, it's just a waiting game. If we start to take out the ENI period lows, then expect us to cascade, and we're probably going to trade in the lower side bids around about 26k. If we don't see that, we start to close above, right, and this is down here, then we know the sellers are being squeezed. So it means that we're going to get a big squeeze to the upside, and we're probably going to get highest prices we've seen in Bitcoin for quite a few weeks. So it's a tough one to gauge. I think structurally we're bullish for Bitcoin to 50k because that's kind of what it's done historically on cycles. Bitcoin, you really have to look at the cycles. But again, as you can see, short sellers never really get involved until we're like in the 90s squeeze territory, and the longs clearly have been involved for quite some time, so we're a little bit too long, and hence why we've had this huge pushback. But then again, price is very steady to the upside. So I think we're going to get squeezed on the MFI, and that tells us that the sellers are too short, and then they're going to get squeezed to the upside. So again, I'm still structurally bullish on Bitcoin unless I see INE period go. Sterling yen, similar. Again, nice little build up to dollar yen. Gap needs to get filled. So again, this was all sit of trades, right? Basically, if you wanted to trade this stuff to the downside on that fourth wave correction, I think you'd still have to buy the bid because we're going to go higher. but I think we're starting to cool off now. The Kiwi, very similar. We said this last week, trade into bids. Look what we're doing, guys. So again, if we can close to the upside, look where the offers are. This won't hold. It's got to be these guys. So yeah, interesting plays. So hopefully guys, you enjoyed the video today. I wanted to just run through the asset classes so you can see where we are, how we view the market. If it's your first time here, like I said, just check out some of the other stuff that we do. But to my next videos, guys, I will say adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?